Hi everybody, Brian here from quantlabs.net. Just wanted to show you yet again another article here on Bloomberg. This one is called New Quant Inside New Quant Gold Rush Bond Traders Get Rich by Coding. Now, I've already posted some stuff already, what the banking industry is going through, Nomura, JP Morgan, Goldman Sachs, and now this. If you're interested in this sort of stuff, you're interested in algorithms, coding, all you gotta do is come over to here to the quantlabs.net/algo, fill in details, get this book and another book as well, and we'll send you out some free stuff. Back to the article. So again, this is found on Bloomberg.com. For those that are on the podcast, again, the article is called Inside the New Quant Gold Rush Bond Traders Get Rich by Coding. So what's it saying? Well, coding is pretty well taken over. As an example, high frequency trading shops, recruiter Selby Jennings for a London job, $400,000 for a PhD graduate, 5 years experience. Now, this is the key. As a desk strategist, people creating strategies. There's ex-Citadel, this guy, Frederic Boyer. I just already talked about that. Wanted by Jump Trading. Blue Bay Asset Management. 70% of the 55 staff members are able to code. Man Numeric. I don't know if that's part of Man, the hedge fund, but a lot of them. It's obviously a quant arm of the $113 billion hedge fund. Robot learning, 70% institutional, 70% of it wholesale reckon strategy of dissecting securities by factors. Now, hopefully you know about factor investing, including factors based on volume, momentum, applicable to fixed income. But of course, this can be applicable to any new asset class out there. So here's one example for this fund here, growth fund, and see how fast it's been growing. Total return has been moving up to, on average, up to 14% just on fixed income. Intense interest, willingness to put money, 18 months. Now here's the thing, quants for decades mined stocks for the riches. Fixed income is now the new field. It's slim with volumes. It's been the next frontier for data intensive active strategies. New quant billions are hiding in the bond market. That's an article separate. New entrants are coming in. Jump recently hired this new other guy from Citadel who does arbitrage and systematic credit strategies. Information is not public. Now here's his education: applied math, bachelor in physics at Harvard. Pretty incredible at level of education. So the credit quant positions are up by a quarter from a year ago. Pretty incredible stuff. Now this article is about inside what it's like. So here at Robeco Rotterdam, they're from this University of Erasmus. They use empirical data, which is proven, program a back test, and analyze the result and make sense of them. So that's what they're pretty well doing the classic ways. That's different from a traditional bond manager who is highly paid and they just spend their days on the phone wading through dictionary-sized offering documents. Now what they do, there's no TVs, but the quants were conspicuous by their absence. So these are quant researchers. These are the really high-paying jobs. And obviously, one of the things that they get jobs with are these papers that they put out on credit factor investing. Here's one, a program named Cobra, and its goal is to work overnight so that the portfolio managers have allocations recommended to them in the morning. If no changes are identified, no trades are done for the day. And here's the funny thing, quant researchers sit where it's like an atmosphere still as a library. It's less straightforward than equity research. So that's pretty well what it looks like. I think it'd be the same for any shop. So I'm just going through this right now. So here you go. Not to say that old-fashioned judgment is obsolete, the type earned from thousands of hours spent on a trading floor. Humans still intervene as only 5% of the model's investments when they pick up something it might have missed. Cautions this guy. And you need the quant skills and you need fixed income skills. I've said that before. Trading is a number one skill. If you're not a fixed income expert, you may miss out on the bond specific things that are simply not there in stocks. Interesting article. Let me know what you think. We shall talk to you later.